Have you ever wondered who in this world can make the money in your wallet shrink instantly, or cause the stocks you own to soar, with just a few sentences? It's not the president of any country, nor is it some business tycoon. It's a group of bankers whose names you might not even know. Sounds mysterious, right? But it's the truth. When these people are about to speak, the world's top traders hold their breath, Wall Street falls silent, and trillions of dollars in capital begin to frantically position themselves or flee. Who are they? They are the central banks of various countries, like the Federal Reserve in the US, the European Central Bank, and others. So, here's the core question: why can a few words from a group of bankers, who seem so disconnected from our lives, sometimes just a tweak of a few words, directly trigger panic or euphoria in global markets? What secret power code is hidden behind this? Today, we're going to unravel this story. Act 1. Meet the puppet master of the economic world. To understand this, we first need a good analogy for the role of a central bank. Imagine the entire national economy is a giant farm, and the central bank is the farm's weather control center. This control center doesn't plant crops or raise cattle. Its sole job is to regulate the farm's weather to ensure the crops our nation's economy can grow healthily. If it's too dry, it needs to figure out how to make it rain. If there's too much rain and a flood is imminent, it needs to make the skies clear up quickly. And every one of us, every company, is a small farmer on this farm. We work hard every day, and what we care about most is the weather. If the forecast says there's a heavy storm tomorrow, you'd rush to harvest your crops and reinforce your greenhouses, wouldn't you? If the forecast promises a month of bright sunshine, you'd boldly plant more seeds and expand your production, right? Every speech from the central bank is the official, highest-level weather forecast for this farm. This forecast directly determines the next moves of all the farmers. Act 2. The weather remote control of interest rates. So, how does this weather control center actually control the weather? The most important remote control it holds is interest rates. The concept might sound a bit technical, so let's translate it into plain language. Interest rates are like the price of money in the economic world. Want to borrow money? Sure, but you have to pay interest. The level of this interest is the price of money. When the central bank feels the economy is overheating, everyone is borrowing and investing like crazy. And prices of goods are skyrocketing in economics. This is called inflation. It's like a severe drought on the farm, with the land cracking. This is when the weather control center steps in. It will press the hike rates button. Hiking rates means the cost of borrowing money from the bank goes up. Maybe you were planning to get a loan for a new car, or your boss was thinking about a loan to expand the factory. Now, seeing the high interest, you both decide to wait. As a result, people's desire to spend cools down, less money circulates in the market, and the overheated economy gradually cools off. This is like the control center creating a light rain to cool the parched land. Conversely, if the economy is too cold, people are unwilling to spend, factory orders decrease, and many face unemployment. This is a recession. It's like a harsh winter on the farm, with crops about to freeze to death. The central bank will then press the cut rates button. The cost of borrowing becomes cheaper. You might think, hey, loan rates are so low, it's a great time to buy that car I've been eyeing. Your boss might think, this is the opportunity. Let's get a loan, buy equipment at a low price, and expand production. And so, more money flows into the market, and the economy starts to recover. So you see, through the simple actions of hiking and cutting rates, the central bank acts like it's controlling the main valve of the entire economy's money supply, profoundly influencing every single person's consumption and investment decisions. Act 3. The real detonator: expectation management. All right, here comes the most critical part. If it's just about hiking or cutting rates, why do markets react so violently, even to the point of panic? Because what truly moves the markets is not just the action of hiking or cutting itself, but the expectation of that action. This is the central bank's core weapon: forward guidance. What does that mean? Let's go back to our farm story. Imagine the weather on the farm is currently normal. But all the farmers are on edge, guessing, what will the weather control center do next? Will it turn up the heat or cool things down? Just then, the director of the control center, like the Fed chair, holds a press conference. He looks into the camera and says, "Attention all farmers. Based on our observations, there are signs of a potential drought in the coming months." He hasn't even pressed the hike rates button yet. He just said that one sentence. But what do you think happens? All the smartest farmers, hearing this, will act immediately. They will start stockpiling water, planting fewer crops, and even selling off crops that consume a lot of water. Because they expect that water money will become very precious expensive soon. That is the market's reaction. Every word, every phrase, even the tone of voice and facial expression of the central bank governor is scrutinized by the market under a magnifying glass. If the chair says, "We are highly attentive to inflation," the market interprets it as, "A rate hike is coming, run." If he says, "We will be patient in assessing the data," the market reads it as, "No hike for now, we can keep playing." If he changes the wording from strong economic growth in the last statement to solid economic growth, just that one word change can send the market into a frenzy. Everyone will frantically guess, why solid instead of strong? Is the economy in trouble? Panic spreads instantly. This act of guiding everyone's expectations through speeches is forward guidance. It's like the rumor the central bank releases before it actually makes a move. This rumor stirs the market earlier and more violently than the action itself. Because what's traded in financial markets is always the future expectation. By the time the central bank actually announces a rate hike, the price of that news has already been absorbed by the market. The real opportunities to make or lose money happen in the guessing game that precedes it. Act 4, a global chain reaction. When the big boss, the central bank, speaks, it doesn't just cause a tremor within one country. It triggers a global financial tsunami. This is especially true for the U.S. Federal Reserve. Because the U.S. dollar is the world's reserve currency, every decision it makes is like dropping a depth charge into the global financial ocean. When the Fed hints at a rate hike, it means the dollar will become more valuable. Investors worldwide, like sharks smelling blood, will frantically sell their assets in their own countries like stocks and bonds, convert them to dollars, and pour them into the U.S. to earn higher interest. For other countries, this is a disaster. This can lead to a sharp depreciation of their currencies, stock market crashes, and even severe financial crises. Historically, many crises in emerging markets have had the shadow of a Fed rate hike looming behind them. So, do you get it now? When the Fed chair is about to speak, it's not just Wall Street that's nervous. Finance ministers and central bank governors all over the world are staying up all night, staring at their screens, analyzing every word he might say, preparing for the shockwaves to come. So, let's return to our original question: why do markets panic when central banks speak? The answer is, because central banks control the valve of the most essential resource in the economic world, money. But more importantly, through the art of forward guidance, they force players worldwide into a race to the front before they even make their move. A single sentence from them can instantly change the direction and cost of trillions of dollars in global capital, deciding the fate of countless businesses and individuals. This uncertainty, and the fear of being eliminated from the game, is the root of market panic. So, what does the future hold? As the global economy becomes ever more interconnected, the influence of central banks will only grow. Each of their weather forecasts will trigger even more violent fluctuations in the global market. For us ordinary people, while we can't change the weather, at least by understanding the rules of the game behind it, we can avoid being just passive, panicked farmers when the next forecast is released. We can learn to read between the lines of the forecast, see the intentions of the powerful players, and thus better protect our own harvest. And that, perhaps, is the most practical meaning of our discussion on this grand topic today.